All right, Bulls and Bears, the credit card shock is beginning. And we're going to talk about some statistics that I think probably most of you that have been on this channel are not going to be surprised, but it is making some news today. A lot of people out there are saying, wow, this is shocking. This is surprising. It's not shocking. We saw this coming years ago, but more recently, I said things are going to be happening this year. Just wait till you see the numbers on the credit cards. It's pretty awful. Please make sure you're subscribed. Let's go ahead and get into this here. Majority of homeowners regret buying a home. Recent homeowners, we're talking about the last 3 years, with almost half of them, and I was going to go into this in my last report, almost half of them admitting that they had trouble making their payments in the last year. And when you see the amount of debt right now compared to what it was in 2008, it's really mind boggling how more people aren't at least talking about what's happening right now with the economy. Right, we have all these rescue programs still in place from 2020. We have the banks still able to loan out money even though they have zero in reserves. That's the law that's been in place since 2020. They still haven't changed that. If they change that, then this whole house of cards comes crashing down. This economy is done. So they can't change it. They've got to have more money flowing, more loans given out. The brick wall is going to be the consumer, because the consumer is not looking so good. And we're going to get into that here in just a bit. But first, another extension of the student debt forgiveness, um, revamping of their loans. I've talked about that many times before I get to that, $30 silver, folks. It might have dropped back down by the time you're watching this after I record this, but as I'm recording this, $30.04. So will there be another smackdown on the paper markets? Remember, silver was $50 in the 1980s, so we're just barely over half of that now. I consider that one of the most undervalued assets, right? Because when you look at just inflation, the cost of living, you don't even need someone to go into the market manipulation to, say that there's something interesting happening with silver. And I think people that are in right now, even at $30, if you're getting in at silver now, you're going to be very, very happy in the next few years, right? Um, there's going to be a new financial system. They're going to try to bring in the digital system. What I'm sticking to here is that ultimately there's going to be a commodity backed um, dollar currency. Maybe it won't be called the dollar. If you just look at what the BRICS nations are doing right now, we're headed towards a commodity backed currency. I don't think there's any way out of that. But let's talk about this. Inflation eased to 3.4%. That was supposed to be good news. If you just look at the headline, I mean, the word ease, it makes people seem like that's good news, right? Folks, that's not going to help anybody. Um, to really help the consumer right now, consumers need deflation, not slower inflation. Of course, they're going to put the word out there saying it's easing. And now the Fed, they're more likely to cut rates, because if inflation's only 3.4%, why not cut rates and make it go up even faster, even though there's supposed to be a 2% inflation target? Apparently, that whole 2% target's been thrown out the window. So does it really matter? Why is there a target if they're not really going to aim for it, right? But here's the real picture with the CPI, right? Does it look like it's going down? Does it look like things are getting easier, right? Starting in 2020, of course, it went up very steeply. And since then, it took a little bit of a less drastic increase. But folks, it's still going up. That's the bottom line. Now, consumers are still in big, big trouble. All right, let's get into the meat of the report here. This is what's happening with credit cards. And I'll just show you the way Fortune is putting it out there. Nearly 1 in 5 Americans have maxed out their credit cards as inflation and high interest rates push delinquencies to 3-year high. Folks, we're just getting started. It's going to be an all-time high. Who knows how long that's going to take? I'd say could be less than a year, but I think it's going to be between 1 and 2 years, right? So whoever wins in November is going to have a problem on their hands unless everything falls apart before then. And I still think the consumer, not just credit cards, but overall the consumer is seeing big, big trouble that we're likely going to see unfold before the end of 2024. But just some numbers here out of this report. Of course, all-time high debt, we know that. So nearly 1 in 5 consumers are maxed out, why are we not seeing a bigger fallout? Why are we not seeing the foreclosures? Why are we not seeing other signs that things are actually imploding, right? So it's pretty simple, because they're still able to borrow money in other ways. People still pulling their money out of 401k, emergency 401k withdrawals. This is the reason, folks, because people are running up so much credit card debt, and now they're having a hard time. And this didn't start now. This started in 2023. It was a record for emergency 401k withdrawals, and this year is going to break last year's record. So when I say things are going to get worse, I mean that's what's happening. Things are just continuing to get worse. The question is, where and when is the breaking point, and how is it all going to unfold? I don't think anybody knows. That's why I've always encouraged people to be ready for anything. Um, Stocks closing in at all-time highs again. S&P 500 breaches 5,300. That looks close to a record. Folks, it's not going to stop. They can push this thing up at the click of a mouse. The stock market is completely the top 10%, or at least 90% of it is the top 10%. That's who owns most of the stocks. So when you see a strong stock market, is it really a sign that the consumer's strong? Is it a sign the economy's strong, right? I guess if you just want to call the top 10% the economy, then sure, you could say the economy's strong with that. But folks, the bottom 90%, a lot of people barely scraping by. When you look at cumulative inflation, it's well over 20%. That was reported here recently out of a headline here. Inflation hits 20%, pushing small businesses to the brink. They're talking about cumulatively. So if you just add up the year's numbers, excuse me, we're already over 20%. And it's even worse in some areas. Look at car insurance. It's absolutely stunning. Also being reported here, NPR, more Americans are falling behind on their credit card bills. Folks, this is happening, and it's finally being reported. We started showing you the trends here over 2 years ago on the credit card debt, and the delinquencies had started to rise. But now a lot of news outlets are finally reporting on it, and we knew this was going to happen. It was just a matter of when. Let's talk about what Wolf Street put out there today. Beneath the skin of CPI inflation, core CPI is 4%. Folks, when you look at a bigger basket of goods and services that people have to pay for, it's much worse than the officials are reporting, right? Most of you know this, but I just want to put this out there because even though most of you know it on this channel, I'd say 99% of the general population, the general public, doesn't know this, right? And I see these videos on social media and on these younger people usually talking about, why is everything so expensive? I don't understand this. What's going on? Can anybody answer the questions? Nobody knows. People don't understand this. They don't understand the basics of what's going on. They don't know the money creation, how it's created out of thin air. They don't know the destruction of the industries, right? All the outsourcing that's taken place over decades, and everything else, right? They do not know the supply versus demand equation, right? A lot of it's basic economics, but it's more than that, when you really get into the meat of the matter, right? So this is where we're at, folks. Most people are not going to be ready for what's coming. Here's another blow to the consumers that are delinquent and can't pay their credit cards and have their credit cards maxed out. Judge blocks new U.S. rule limiting credit card late fees. There was going to be a new rule that limited late fees to $8 per month, but the judge blocked that. So now they're still going to get as many late fees as these credit card companies want, basically. Set to take effect on Tuesday, the rule would have saved households $10 billion a year in fees, per the Consumer Finance Protection Bureau. So not much relief in sight for credit card borrowers when it comes to these fees, well, folks. And this is a big source of income for the banks. Why would a judge not pass that? Why wouldn't the judge want to help consumers? It seems like you'd want to help consumers, especially in a year where they're trying to keep the economy looking good. Do they want consumers to hit the brick wall, right? Because that's going to be really noticeable when you see 1 in 5 people suddenly stop spending money. Now, if they are maxed out, it doesn't mean they're going to stop spending money today. There's still other ways that people are getting money, like the 401k withdrawals, borrowing from people, borrowing from friends, relatives, other loans, personal loans, and they can still buy things on these buy now, pay later programs because those are not even reported on the credit bureaus as far as what I read, right? So a lot of interesting things happening right now. A lot of people are scraping here, scraping there in order to get by. And how much longer can this last? We're not even to the middle of 2024 yet, and 1 in 5 people are apparently maxed out on the credit cards, right? So let me know how this ends, when this ends, and what are you doing to prepare? You know what I'm doing. What are you doing? I'd like to hear from you down in the comments. I'll be reading. Please make sure you subscribe, and we'll see you on the next report, everybody. Bye for now. Peace.